So we've got some interesting moves going on in the stock market. I'm sure, as everyone's aware, the market's not looking too great. Everything's red, down, crashing. Everyone's talking about that. I mean, this is just the heat map going on here, and it's just full of red. Nvidia down, Microsoft, Google, Amazon. In this is one day, almost 9% down for Amazon is insane. If you zoom out, it gets a little bit better. You know, the week it's Nvidia down harder, Microsoft down harder, Amazon's still down bad, but the big like Mag Sevens are getting hit hard. These guys, the people who are basically carrying the market for the longest time are now a little weaker and moving down, and it's moving the entire market down. But that brings us to something that's happening with the big name investor Warren Buffett here. He's making moves, and maybe he might know something that be a little have a little insight, right? Maybe he knows a little bit of what's going on. But he just had his Berkshire Hathaway earnings report, and they had some big news. This account had a pretty good thread talking about it, so we're just going to go through their stuff. He had here a new all-time high cash position. So right now, Warren Buffett, Berkshire Hathaway have $276 billion in cash sitting there waiting for something to do. Now, obviously, people are going to look at this and say, oh my God, Warren Buffett's saying there's a crash coming. But Berkshire Hathaway, it usually has a lot of cash. This is a ton, right? This is an absolute ton of cash. But usually they've got tens of billions of dollars sitting around. And even as of recently, it's been hundreds of billions. But um, he invests, the way he invests is much more value orientated. And he would basically have been saying for the past many, many years that all these tech companies are overvalued and all this stuff. They have to continue to grind higher. So things can be overvalued and go higher. The market can remain irrational longer than you can remain solvent. That's a saying for a reason, but he's sitting on a lot of cash, which obviously makes people think maybe there is a crash coming, maybe something not so great's coming. And with the market doing what it's doing, people might be justified in thinking that. But if we look at their cash position for basically what they've held, this goes all the way back to 1992, 831 million. Then it's just kind of gone up since then. So a billion, they bought stuff, 2 billion, down a little bit, down, and then 6 billion, 36 billion, 60 billion, 39 billion, bought some stuff, but tens of billions of dollars. Then we get to the hundreds of billions of dollars, and now here we are sitting at over a quarter of $1 trillion just in Berkshire Hathaway. So obviously, it's a ton of money, and people look at it as a sign that the stock market's not in a healthy spot, and Buffett's probably expecting a crash. And it helps this case or this news here if you think there's a crash with what Warren Buffett did with his portfolio, which is this right here. He sold 50% of his Apple stock. So 50% of his Apple stock, he got rid of it. And that's a huge news because he's owned Apple for, a long, long, long time. That basically Apple, being a huge staple of his portfolio, made a bunch of the money that he made. I think if you look at the dividends that he gets from Apple, that he gets paid more than the CEO of Apple. It's just kind of funny to see how these numbers work out. But he's had this stock for a long time. I mean, we can kind of look at this, I guess, this statement here, which is breaking down stuff, obviously. But at the bottom here, it says that approximately 79% of the aggregate fair value was concentrated in 5 companies, that being American Express, Apple, Bank of America, and Coca-Cola and Chevron. So if you see down here, Apple is this one. We can try and do this. It's going to block the whole thing. It's this one right here. $174 billion was Apple, which is the biggest holding out of any of these. So that 79% is mostly just Apple. Mostly his portfolio is just Apple. Bank of America 34 billion, Coca-Cola 23, American Express 28, and Chevron 18. So all of these don't even come close to the Apple position. Even if he sold 50%, 174 billion, cut that in half, it's still the biggest holding by far. So, it's kind of insane. And that's actually the top part here. So this was 79% were these values, and then those same companies, 72% they make up. Apple's still here at 84 billion, still, way, way more than any of these other companies here. So Warren Buffett selling his Apple stock, that is a big thing to look at and say, okay, maybe there is something coming, or maybe he thinks there's something coming, and this is a problem, right? Warren Buffett is a well-respected investor, been doing this for a long time, might have been a little out of touch recently when he was investing in stuff because he had some things wrong that he threw money at recently, and he's hated Bitcoin and missed that, and the best performing asset of all time for, or best performing asset of every year except for like 2 years. So he missed that, which is not a great sign, but plenty of other people hate Bitcoin and missed it too, so you could kind of write that off. But he does seem to be getting a lot more misses recently because the financial tubings and the way it works has just kind of changed since he started. People with passive investing and 401ks and people just putting, a few $100s a month into their 401k or into an ETF passively, putting it in there, it kind of bloats all these companies because these flows just come in and buy the biggest companies, and that happens every single month from millions of people. So kind of ruins this whole thing. So it's just a weird time. But if we wanted to look at what Warren Buffett owns, this is his portfolio here. So this is what it looks like. I'm assuming, yeah, see, so this is basically all of these. This 28% is missing from here, but these stocks make up the majority of his portfolio. 29.6% Apple, 14.4% of Bank of America, 12.3% of American Express, 9% of Coca-Cola, and 6.5% of Chevron. So no surprise, right? These are the companies that he has the most. We just saw in that paper. But for Bank of America, he's been selling this daily over the last couple of weeks, so his current percent will be lower. So he's selling Bank of America too, which that one's a little weirder because if Bank of America was in trouble and there was some sort of crisis that happened with the banks, like Bank of America is getting bailed out. They've been declared too big to fail. They will get bailed out. No problems they'll have to deal with. But he is dumping those as well. And even for this year, Warren Buffett, he bought $4.3 billion worth of stocks, sold $97 billion. So he's been much more of a net seller than a net buyer recently, and probably for good reasons, as the market seems to be not happy with what's going on, maybe pricing in different things in politics in the world and thinking there probably or could be trouble coming up ahead. The labor reports and stuff that came out were not very good, so probably spooked for that. And then rate cuts, people are always be excited about that, except for historically when you look at rate cuts, basically whenever the Fed cuts rates, the market plummets because that means the economy is in a weak spot, and if it's in a weak spot, then companies make less money. So it's kind of a weird thing where rate cuts don't mean that things are going to explode in value. Maybe they will, but historically it's kind of meant, okay, this solidifies we're weak, let's hold back and see what happens here, and things go down. But Warren Buffett, not a fan of the current market, can't even blame him, but maybe he's wrong. Maybe this will be a dip and be, swing back up, and we'll look at this and think that was a great time to buy some stuff. Actually, it is the equivalent this fall that's happening right now. I'm pretty sure it is the equivalent of the 2020 crash. And obviously, if we look back then, you would be super panicked and everything would be crazy. But fast forward to today, you do wish you would have bought back in 2020, right? Because things recovered and went insane. So who knows what could happen. That's going to do it for this video. As always, don't forget to smash the button and subscribe, and I'll see you guys in my next